You're a small business owner, juggling your daily operations, keeping your customers happy, and managing your employees. Everything seems to be going smoothly until you get that dreaded reminder. Tax season is coming. Suddenly, the room feels a little heavier, and your stress levels spike. You start wondering, what did I miss? How can I maximize my deductions without making any mistakes? Sound familiar? You're not alone. Taxes can be overwhelming, especially for small business owners. But don't worry. By the end of this video, you'll have the essential tax tips to not only survive tax season, but to thrive financially year-round. We're about to dive into the smart strategies that'll keep more money in your pocket and ensure you stay on the right side of the IRS. Welcome to Tax Tips for Small Business Owners, where we take the confusion out of taxes and show you how to keep your business finances in tip-top shape. The first tax tip for small business owners is a simple one, but often overlooked. Keep your personal and business finances separate. It sounds basic, but mixing these can lead to all kinds of tax headaches. When your personal expenses get mixed with your business expenses, it becomes much harder to track what's deductible and what's not. Plus, if you ever get audited, you'll need clear records to prove your business expenses are legitimate. That's where separate bank accounts come in. Open a dedicated business checking account and, if needed, a business credit card. That way, every time you make a business-related purchase, it's easy to track. This simple step will save you hours of sorting through receipts when tax season rolls around. Now let's talk about the fun part, deductions. Deductions are your best friend when it comes to lowering your tax bill. But many small business owners don't realize just how many deductions they're eligible for. First, there are the basics. Office supplies, equipment, and software are all deductible. If you work from home, your home office is a goldmine for deductions. You can deduct a portion of your rent, mortgage interest, utilities, and even internet costs. Another major deduction, vehicle expenses. If you use your personal car for business purposes, say meeting clients, running errands, or making deliveries, you can deduct the mileage or actual expenses like gas and maintenance. But wait, there's more. Did you know that business meals are also deductible? The key here is to keep detailed records. Make sure the meal has a clear business purpose and keep the receipts with a note of who you met and why. You can typically deduct 50% of the cost. There are many deductions, from travel expenses to marketing costs, so don't leave money on the table. Take advantage of every deduction you're entitled to. Here's a big one that a lot of small business owners miss, the Qualified Business Income Deduction, or QBI. This deduction allows you to potentially deduct up to 20% of your qualified business income from your taxable income. It's a huge opportunity for small businesses and can significantly lower your tax bill. But there's a catch. Not all businesses qualify, and there are some income limits to be aware of. If your taxable income is below a certain threshold, you should be able to take full advantage of this deduction. For 2023, that threshold is around $182,100 for single filers and $364,200 for joint filers. Make sure you talk to a tax professional to see if you qualify and how much you can deduct. It's worth exploring, as this deduction could save you thousands of dollars. As a small business owner, you're responsible for paying taxes throughout the year, not just during tax season. If you're not aware of this, you could face hefty penalties from the IRS. This is where estimated taxes come in. Unlike traditional employees who have taxes withheld from their paychecks, you'll need to pay estimated taxes quarterly, every 3 months. This includes income tax, self-employment tax, and any other taxes your business may owe. The IRS expects you to pay at least 90% of what you owe by the end of the year through these quarterly payments. If you don't, you might face penalties. To avoid this, estimate how much you expect to owe based on last year's income and set up automatic payments if possible. This will ensure you don't miss a payment and that you're not scrambling to come up with the money at the last minute. Next up, should you do your taxes yourself or hire a pro? The answer depends on how comfortable you are with tax laws and how complex your business is. There's no shame in outsourcing this to the experts. If your business is relatively simple, say you're a sole proprietor with straightforward income, using tax software like TurboTax, QuickBooks, or H&R Block can save you money and make filing a breeze. But if your business is more complex, you might want to consider hiring a tax professional. A certified accountant or tax advisor can help you find deductions you might have missed, ensure that you're paying the correct estimated taxes, and help you avoid costly mistakes. Plus, if you're ever audited, having a professional in your corner can be a lifesaver. Don't be afraid to invest in a tax expert. They could end up saving you far more than they cost. Let's talk about a way to not only lower your tax bill, but also secure your future. Contributing to a retirement account is one of the smartest tax strategies for small business owners. Contributions to retirement plans like a SEPI IRA, Simple IRA, or Solo 401k can be deducted from your taxable income. Not only are you saving for your future, but you're also reducing your taxable income in the present. It's a win-win. For example, if you contribute $10,000 to a retirement account, that's $10,000 less that you'll be taxed on for the year. Depending on your tax bracket, that could lead to significant savings. Plus, these retirement accounts often come with higher contribution limits than traditional IRAs or 401ks, meaning you can save even more. Take advantage of this double benefit: tax savings now, a secure retirement later. If there's one piece of advice that could save you from future tax nightmares, it's this: keep meticulous records. The IRS requires you to keep records of all business expenses, so having a solid system in place is crucial. Use bookkeeping software like QuickBooks or Xero to keep track of income and expenses. These programs can link directly to your business bank account and credit card, making it easy to track everything in real time. Also, make sure to store receipts, invoices, and other documentation for at least 3 years. This way, if you ever face an audit, you'll have all the records you need to back up your deductions. There you have it, 7 powerful tax tips to help you as a small business owner. From taking advantage of deductions to keeping your records organized, these tips will make tax season a lot less stressful and keep more of your hard-earned money in your business. The key is preparation. Don't wait until the last minute. Get ahead of tax season by setting up systems that work for you. And remember, if you're ever unsure, reach out to a professional for help. Thanks for watching, and don't forget to subscribe to the channel for more small business tips. You've got this.